Hi everyone, Jasper Basson. Thank you very much for watching this. We planned on actually a nice trip to Chamonix today. Chamonix is always a good friend of mine, Bernard. Always open to for interviews and all kinds of related things that we do at Chamonix. Is we're always open the farm for us. So first of all, thank you very much, Chamonix, for being open to us. And unfortunately, this time we couldn't make it. Definitely, we're gonna have a follow up, and definitely at that stage we will go to Chamonix and also showcase their beautiful farm and their beautiful environment. So the reason for today is Graham Barnes joining me from Barnes and Co. Yesterday, I've done a quick Facebook Live regarding invoice discounting, invoice factoring, merchant cash advances, all kinds of ways how to be in contact with your banker very quickly, to potentially look at overdrafts, etc. We are sitting in a difficult time currently. South Africans been advised that obviously from Thursday evening we're locked in our homes for about 3 weeks, and we need to adapt to this, and business owners need to adapt and play very quickly regarding finance for their business and for working capital to get them through this very difficult time. So, Graham Barnes, thank you very much for joining me.
No, only a pleasure, Jasper. Thanks for having me. I think it's very important that we try and get these types of messages and content out at the pressing time. It is quite upsetting time with the announcement of lockdown from Thursday. So, yeah, thank you for having me. I appreciate it.
So, I know Graham for quite a number of years already. He used to be a business broker, so he always used to be in the, and I know also, I think through his parents, and he can tell us his origin story in a moment, but through his parents, he's been involved in a lot of corporate businesses. So he's been involved in corporate quite a long time, but I came to know Graham through a client of mine that at that stage wanted to sell his business, and him at that stage being a business broker. And very professional always. Everybody that I refer him to always give me the same response, and it's very professional. So I think, Graham, just for everybody to understand who you are and where you come from, just give us a little background of who you are.
No, sure. Thanks, Jasper, and thanks for the kind words and compliments. I'm blushing a bit. but thanks for that. I appreciate it. It's always nice to get some positive feedback. Yeah, just to give you a bit of background on myself. I am pretty much as entrepreneurship as they come, entrepreneurial in that sense. So I'm actually a second generation entrepreneur. My family and I have been fortunate enough to build up some concerns over the years in the supermarket retail space, as well as catering supplies and a sales and distribution agency. I'm very fortunate that I was guided and raised by a self-made blue-collar entrepreneur in the form of my father. So I've had a lot of years of experience in a variety of SMEs, a variety of business circumstances, markets, and so forth. So yeah, I always try and share my knowledge and insight with other business owners. I'm fiercely passionate about entrepreneurship and assisting other business owners. I think now more than ever, I think it's very critical that we all act collectively and try and not panic over the next short while, few months. Rather, let's focus collectively on the controllables and how we can assist each other moving forward.
I think difficult times breed excellent leaders. So I think it's a testing time for all business owners and the captains of the ships of all these businesses. And it's always a good, tough times are always amazing time to actually see how a leader operates under stress, because we all can operate in good times. We can operate amazingly and with smiles and with courage, but it's not always that easy in difficult times. So I think going through.
You are quite correct, and in that regard, I'd just like to personally to say, kudos to President Ramaphosa and to the South African government for the firm, decisive action that took last night. I think it was critical that we had to enter a phase of lockdown. It's not something we wanted for any SME, to be honest, but I think in terms of longevity of our economy, and for the sure vital health of our masses, it was critically important. I feel that he was exceptionally firm and strong and resilient in this crisis, and it shows that he has got quite a bit of capacity to leadership, and I think we need to be positive and thank him, and in light of that, give credit where it's due. To be honest, I think it was the right decision. Yes, it's going to be uncomfortable and cause strife for the next few weeks, most likely, basically in our houses, because we're stuck with our loved ones, which can be both a blessing and a challenge.
For sure.
But at the same time, we have to give kudos there, and I think it's well done to the local government. Also, be very vigilant to follow the exact government websites. Straight away last night, I saw potential fake news in the form of talking about the debt relief fund being owned 51% owned. They need to get access to it. From what I can gather, that is fake news. That it's only going to create alarm and panic, and that is not what's needed right now. Now is not the time for any kind of sharing of that information. Rather wait for everything to be verified before you paste it, because it just creates unnecessary anger and panic at the moment. That's the last thing we need in the current scenario.
Thank you for watching. Just a quick reminder to grab your gift bag for entrepreneurs in the link below. It's a gift bag for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that gift bag for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the gift bag voucher in the link below, and we will be in contact with you as soon as you've done that. Thank you for watching, and back to the interview. Yes, I agree. I think everybody's in panic. I must agree. I'm overall, I think you know me as that kind of person as well. I'm a very positive person overall, and I'm always trying to uplift everybody around me as well. And I had a bit of a, let's call it a crash, but I slept bad last night after the speech. Not about locking in and all. I think I agree with you. I think that's a very good decision from the president, and I must applaud him as well. I think that's definitely a great decision from him, and it couldn't be a very easy decision based on the current affairs in South Africa. But it's very important that it had to be done. But it doesn't take away the stress levels of the economic. The rest of 2020, I think, is going to be economic warfare and a very difficult time for us. But again, strong sailors has always been created in difficult seas. We want difficult, amazing leaders, and it's never been created in easy times. So I think that's something I remind myself a lot about these days, is be thankful for the difficult times as well, because it creates a better version of myself.
Oh no, 100% agreed with that, and that's why I think in the time that we're currently going to experience over the next few months, potentially maybe even for 12 months to 18 months, we make provision for that, is to be proactive. Let's not be reactive. Unfortunately, I see it in business daily where people tend to get panicked or have some strife, and they become reactive. Let's be rather proactive. Let's look at remaining calm, taking a look at all of your channels that are available to you. There are options available across the spectrum for business owners, from advice and guidance to funding channels as well. So, in this time, let's rather take a breath and do a bit more information. Try and gather as much, data on what is available to you, or speak to somebody that can guide you in this time. But be proactive. This is not something that's going to just rush over either. Unfortunately, there are going to be cash flow challenges for the majority of businesses. Actually, in fact, I think every single business is going to experience some form of cash flow challenge within the next few months. However, there are channels and there are methods of looking and addressing that. And that's where I help to guide wherever possible.
Yes. Great. So this is actually the very first point I want to emphasize on, and I think we can start off how the whole process works, going from there. But I think to start with, to get you in the picture of where you belong in the whole process of credit providing and applying for finance, is your work is actually, and again, it's back to creating value. But you creating value, you're the middleman between the entrepreneur and the finance house. So that's the way I see you, at least, is you assist entrepreneurs getting finance, getting to the right places and the most professional institutes and firms to apply for finance. But also the bigger picture is educate those entrepreneurs, adding value to them in the sense of educating them that they understand what is required and exactly how does this whole process work. It's not just money that flows. It's actually, there's a reason behind every decision and transaction that will happen. And I think that's important to understand, is that it's not just a flow of money. It's not just merely overdraft. You can take the money and spend. It's a very structured way of financing. So
quite correct, and you're spot on with regards to me referring to me as a middleman per se. In a sense, that's exactly what I am. That's not necessarily a bad thing. What that basically means is that I've got the relative experience and knowledge for a variety of business solutions with regards to working capital and cash flow and so forth. My role is quite simple. There is a variety of solutions that are applicable for certain SMEs, all dependent on their current industries, their current position of their business, their cash flow scenario, different risks and challenges that are addressed that specific business and industry. There are a variety of variables that influence that. Now, my role is quite simple, is to help guide a business owner to the correct channel. Now, unfortunately, there's going to be a lot of different channels and information, passed on to people through, social media or advertising. What that indicates is that channel of funding, yes, is available for the business, but it's not necessarily the correct channel. One needs to be very, very strategic when deciding on the correct channel of funding. One needs to look at all of the parameters, the risks, the qualifying factors, and so forth. Otherwise, you might just end up wasting time for a few weeks thinking that you're going to access the cash flow, and then it's not available because you don't actually qualify. So it's very, important to pre-qualify, look at your individual characteristics of that business, and then provide you insight and advice on what's the right channel to actually select. Because if you don't select the correct channel, yes, you might have a short-term access to the cash flow, but long-term it might affect your operational capacity because you're not effectively geared and servicing that debt effectively or in the right incremental amounts per se. So very important that a lot of thought is placed into the correct channel of funding for that specific business. And that's how, that's my purpose. I'm here to guide and assist and try and give, as much insight into those channels for business owners moving forward.
So just for any entrepreneur listening right now and don't understand gearing for the asset to the finance, can you just in a nutshell explain exactly how we would gear the finance?
Correct. So what's most important is a very firm principle, I believe. It's what I call cost to benefit ratio. When I talk about cost to benefit ratio, what I'm talking about is the actual cost of capital that's attached to that working capital loan. So what we've got to determine is what can the business actually feasibly repay, i.e. gear itself against, with regards to raising capital against either its history, the sales that it's done over the last 12 months, and based on that, a capital loan can be geared against that amount of financial data. Otherwise, we look at gearing it against potential debt, i.e. where you have offered a service or rendered a product and vice versa, and with regards to that, you then have generated an invoice or you have a debtors journal or book, and you can utilize that to gear and structure a loan against that. So when it comes to gearing, it's basically as simplified as we're just trying to actually match the correct financials against the structure of your business so as to provide a safe ambit of gearing so that the business can feasibly repay any potential working capital loan while not being placed under duress in market operation.
All right, the three things that you really look at assisting entrepreneurs are invoice discounting, and cash advance, or merchant cash advances.
Yeah, correct. Quite correct. There's a few of them. It's the first one we refer to as a merchant cash advance, or MCA, And then the second channel would be what we refer to as data financing in the form of a invoice factoring or invoice discounting. So there are two different options available with regards to data financing. The other option you mentioned earlier was what we refer to as a merchant cash advance. These MCA loans are ideally suited for business operating in retail, hospitality, and so forth. Unfortunately, I was advised as of last night that they are temporarily suspending those applications for the next week or two, which I completely understand because it's too much risk to issue out loans with so many variables with regards to lockdown. However, fortunately, debt financing is still going to be applicable for the foreseeable future. So I think that's the two channels we need to primarily discuss today with regards to what considerations there are.
Yes. Before we go to invoice discounting, invoice factoring, I think it's just, I understand that, and it makes totally sense to me as well regarding a risk perspective that merchant cash advances can't be done currently because there's no guarantee of future revenue. But I think just, again, in a nutshell, can you explain how who can apply for merchant cash advances and how it more or less works?
No, correct. So yeah, with regards to merchant cash advances, it's quite simplified in the sense that the only industries that qualify for them operate in retail, health and beauty, and hospitality. So think of your food franchises, think of your health and beauty, like your sorbets, think about your retail, like your supermarkets and so forth. Those are the businesses that qualify for merchant cash advance. In effect, the easiest way to explain it is it is you raising a working capital loan against your future revenue. So what would happen is that the funding house would analyze your last 12 months data of the business. They'll take a look at your financials, management reports. They'll take a look at your bank statements. They'll take a look at all of those factors. Based off that, they will determine a facility that is feasible. So to give an example, if a business had to have a fairly healthy GP of say 50 to 40%, and they had an average monthly turnover of 1 million rand, potentially they can qualify for up to a 500 to 700,000 rand cash advance. That would be traditionally what they would be available to them. Then what would happen is that the funds would be recuperated almost daily or alternatively weekly via a debit order or via your card swipes, so that funds can be collected immediately over the short term. That in effect helps you to actually repay the loan quickly. It doesn't place you on a long-term compound model, and you know exactly what your cost of capital will be for the period. So you've got a lot more transparency with regards to the structure of that deal, with regards to sort of wanting to raise it. And the nice part is, even if you qualify for X amount, you only utilize what you need. So you qualify for 500,000, and you only need 200,000. Only draw down that from the facility. But as we mentioned before at the start of this conversation, unfortunately, those facilities are temporarily suspended. We will try and keep you guys updated on what is possible with regards to the reactivation of that, which I'm sure would be most likely in a few weeks. However, I do understand their perspective because it's difficult for them to provide a loan on potential future revenue that might not exist under the current circumstances.
Yeah, I think if we understand the perspective from the credit provider side as well, it is a big risk, and if you understand the transaction, that's why it's important to explain the transaction as well, because then we can, from the entrepreneur side, over both sides, we can understand why there can't be currently any merchant advances, because there's no guarantee of anything at this stage. So let's go to invoice discounting, invoice factoring. And I believe most entrepreneurs somewhere came along the idea of that and understand the basic concept of I deliver an invoice and get payment on that. I think the confusion generally come in the difference between invoice discounting and invoice factoring. I think that's one of the things that I pick up that people don't understand, and it is somewhat confusing because it's almost the same thing, but it's different. It's the same, but it's different. And the second thing is also, again, the process of how do I get to the point of getting my company vetted and then also my customers vetted, enter the process where I actually get payment and how do the payment process works. I think that's a few. I know there's a lot of questions in there, but maybe give us I think start with the exact difference between invoice discounting and invoice factoring.
Yeah, no. So you're quite correct. It is sort of a confusing subject for a lot of business owners. The easiest way to understanding data financing in a whole is quite simple. It is utilizing your current debt, i.e., money that is owed to the business on term, and using that debt that's on terms to raise a capital loan against it. So when we take a look at invoice factoring, basically what it implicates is that in this scenario, a funding house or a financial house will provide you a working capital loan facility against your debtor's book. So say, for instance, you have a debtor's journal or a debtor's book that's running between 30 to 120 days. Naturally, you might have a few $100,000 that's owed to you on selective accounts and so forth. What you can then do is you can actually offer your debtor's journal to this third-party funding house. What they would do is they would take over your whole book. When I say take over the whole book, they will run it completely. So when you have factored in your whole book, they would take a look at the whole amount. Say, for instance, that is 1 million rand that is owed to the business over the next 30 to 120 days. They would then, if you're qualifiable, issue you up to 75%. So a 750,000 rand cash payout immediately. They would then keep the 25% balance and actually recuperate the funds directly from your clients. So basically, they would run the whole debt collection process. The positive notes on that is that you don't have to go and chase your debt, day in, day out, which I know is an extreme frustration for a lot of business owners. So that is money that is due to you. You don't have to physically go and chase, put out fires, create tense scenarios with your clients potentially by just trying to get what's due to you. That whole process is run very effectively and professionally by the funding house, where they've got an in-house debtors clerk attached to your account, and they will basically be in contact with the clients, recuperating the funds. Once the funds have been recuperated from them, they would pay you out the balance of that 25%, less their agreed upon fee. They typically charge a fee of prime plus 0.5 to 2.5%, plus an admin fee of 0.5 to 2.5%. So it doesn't necessarily mean it's going to be, exceptionally higher than your standard interest rates per se, and it gives you an immediate release of that facility that actually got access to working capital for either opportunities or either for bridging purposes, which I suspect might be the case in the next few months. As for invoice discounting, correct, it is similar to factoring, except that it offers far greater flexibility. But when I say it offers far greater flexibility, it's in the sense that instead of you having to implicate your whole debtor's journal or relinquish, complete control of that, you can actually spot or select invoices that you would wish to discount or in effect sell to a third party. So, for instance, your debtor's journal is 1 million rand, but you've got a massive invoice for a big corporate for 300,000. You can decide to only sell that invoice, and that will be the only invoice that is implicated in that regard. What they would then do is the funding partner would assess you. If again you are qualified and you survive the vetting process, then basically what they would do is they would pay you out 80 to 90% of the value of that invoice in full, and then take over the debt collection responsibility for the period that is due for that invoice. Also, the nice thing with regards to the flexibility is that this funding house would only charge you a daily fixed rate. So as long as that capital has been issued out or the debt has been collected, that is only the period they will charge you for. So, this is very sort of accessible for guys that only need maybe a 7-day or 14-day or 50-day cash flow bridge or injection to capitalize on that opportunity, for them to not implicate their whole book, but rather selectively choose and have that sort of, choice at their disposal.
So I think to summarize, invoice factoring, as far as I understand it, is the whole book. You don't have a choice about your invoices. You sell basically your whole book to the merchant house or to the factoring house, and they manage basically the whole process on your behalf. And invoice discounting is almost a pick and choose kind of invoice. You can choose what invoice you want to be factored or discounted, and
Quite correct.
and
Quite correct.
it's a lot more flexible because you can you don't have to have a massive debt book. You can actually pick and choose a few invoices, and your larger clients with larger fees or goods, and you can actually just discount that.
Yeah,
So
quite correct. Quite correct. So, in a nutshell, you hit it on the head there. Factoring implicates the whole book. Discounting, you can select which invoices you want to sell or discount specifically on your requirements.
what I like about both options, the invoice factoring or discounting, basically selling your invoices, is you're actually gearing against the actual asset. So you're gearing against an accounts payable, a client that you actually already invoiced. So it's an asset in your books, and you can't over gear or over finance yourself and get more finance than typically in the banks. Sometimes, the banks can give you a massive score, and you can be overscored, and you get an overdraft not linked to anything, and it's a lot more risky than actually just sell a specific invoice, and you are capped to that debt on that portion of that invoice. At least that's how I see it.
No, spot on, and you raise a very valid point there. You're only basically taking a loan against what is due to you in effect. So you have mitigated a tremendous amount of risk in the sense that you're not taking a loan against potential future variables. Now, I suspect the scenario shall be for a lot of business owners that they're going to immediately look at extending the overdraft and vice versa. So overdraft is extremely handy with regards to accessing cash flow quickly. However, one needs to be completely aware of the repercussions. And when I say repercussions, I'll say it in the sense that a business owner needs to consider the fact that, firstly, the overdraft model is on the bank's model, which means it's going to be working on a long-term compound interest repayment schedule. Secondly, bear in mind that a good majority of business owners potentially could have signed surety in their personal capacity to that overdraft facility. So if you are drawing down your overdraft facility over the next few months in order to try and bridge cash flow for the business, be aware that if unfortunately anything does go south and the business does take a serious dip and for some reason the bank recalls its loan, you are personally going to be liable, either in the form of the asset that's attached, in the form of a house or notarial bond on your car. You will be personally liable for it with regards to that scenario. So just be extra vigilant when making that decision with regards to extending the overdraft, because personal surety might be in effect, and that could naturally obviously affect the person attached to it quite drastically if there is any factors that go south from there. Fortunately, with the alternate financing models, one does have the option of transparency. You know exactly what you're going to be in for, the amount, the period, the cost of capital. We play open cards in that regard. It's the only way I feel you can do business in the current conditions and over the next few months is know what you're in for. Once you know what you're in for, you can make projections, you can make provision to service that debt or to inject that strategic cash flow to take on opportunity. At the same time where we've got cash flow challenges, there's still going to be opportunity in business. Maybe from a supply side, there might be guys that'll be able to wanting to do some good deals, and you can actually utilize stock for the future at the moment. So there's always opportunity, but take a very concise and take a very long, hard think about what channel you want to pursue. The last thing we want is for people to get sort of personal attachment or surety that's going to create strike on their personal life.
Some very good points raised there. I agree with you, especially overdraft. Not to point any fingers to the banks. There's definitely a place for them as well, but I think especially for debt, it's very overdraft was always is and will always be a very difficult or dangerous debt to raise, because there's no any asset or anything linked to that, and like you say, it's personal surety. It's a very high risk. I think additionally to that as well, which, what I like about it, and I know a lot of entrepreneurs struggle with, is actually collecting they write their fees or they write their goods, their sales, but they are very skeptical or almost afraid to collect their fees. And this, you can almost see your factoring or your discounting partner to be a partner for you, and assist you by, because they've got just as much interest in collecting back that invoice than yourself. So having them as your partner to assist you by, first of all, vetting your client, make sure all your credit apps and everything is in place, and also assist you to collecting your fees. Do I understand that process correctly?
Yeah, quite correct, and 100%. That is typically the view of the funding partners that I work with specifically, is that we view all of our SME clients basically as a partnership. It's as simple as that. Your longevity is our longevity. So when it comes to providing that safe ambit of gearing, providing the right consideration for the business owner, we have the same ramifications, we have the same implications. Our purpose is to effectively gear the business so that it can grow and survive, or take it to the next level. We are not there for a quick buck or get rich scheme. That's not how this type of funding works. We basically look at growing our business in line with the owner over time. So unfortunately, there is a time where there is a lot of sort of get rich schemes or loan sharks out there that are going to be peddling misinformation, or trying to get guys on some crazy rates. We won't look at doing that. We rather look at partnering with that business owner to effectively guide them along the path. Otherwise, we're just shooting ourselves in the foot.
I think that leads me actually to my next question is, there's a lot of companies out there that just have ads on Google with loans of 150,000 rand, business loans, and it's very easy, almost want to say it's very easy to get. But the moment application is too easy, you're in for a high risk transaction on both sides. And I know with the application, I've done a few applications with you as well. And I think that's a good conversation we can have right now, is for you to share some value regarding the application process. But as far as from an accounting perspective as well, see the process. Make sure your financials are up to date. Make sure you work very closely with your accountant, and there's never been a better time to have an online cloud accounting system. There's a variety of accounting programs available: Sage 1, QuickBooks, Xero, all are cloud-based. And work closely with your accountant and make sure that your financials and your financial information is up to date, up to the latest month completed. So, but typically financial statements for the last year, management statement up to the last month, bank statements, details of the directors. That's more or less what the things that you're looking at when you start looking at the new client. Is that right?
Yes, quite correct. Just to get back to your first point there, with regards to sort of alternative funding, all the different models do vary, specifically from company to company. Now, unfortunately, some of the companies do use, how do I put it, riskier model assessments. So they're more willing to provide overexposure in order to get the deal done. Now, that's where we tend to draw the line. In fact, I would rather avoid overexposure of any kind and rather decline the deal. So be very vigilant of applications with guys that are promising very quick money, because you might just go down a rabbit hole that is not effectively structured for your business in terms of being able to repay or service that debt. Rather, take a bit more of a conservative approach and try and do it from a perspective of what's a safe ambit, what is the right amount for the business, and once I've determined that, I'm going to sign off or anything on that. So that was just to come back to that first point. As for your second point for application, we try and keep it as simplified as possible. First thing first is that obviously you'd have to complete an application form with that funding partner. However, leading up to that, we'll have to get your supporting documents in order. Now, firstly, the most important qualifying factors are the following. The business must be trading for over 6 months. It has to be up and running. We cannot assist startups, unfortunately. So 6 months of trading. Secondly, they must be operating as an entity itself. Unfortunately, we cannot fund sole proprietors because that is seen as business to consumer. That falls into the regulation of, personal loans and so forth. So we only fund business to business. Business must be a registered entity, trading for 6 months or longer, and have a minimum turnover of 100,000. Now, I say a minimum turnover of 100,000 because if the turnover is less than that, there is no safe ambit of gearing for a loan, to be honest. Unfortunately, I'd love to assist and help as many people as possible with 15, 20, 30,000 Rand cash flow injections. Unfortunately, it is not feasible, not viable, and I would not recommend that for your business because the repayments are going to place your operational capacity under pressure, I almost guarantee it. So the application process itself is quite correct. We're going to need financial information. We're going to need your latest audited financial statements or management accounts. We need updated 3 months bank statements, a copy of your lease agreement, a copy of your debtors and creditors age analysis, and so forth. Fortunately, your accountant should have access to this information for you. If not, then I would recommend that people start getting their books in order. When looking at applying for finance in this regard, when we have clean financials, when we have verifiable books, the whole process is so much quicker and easier. And you can, in effect, get money out in up to 3 days. That is possible. That is reality. That this funding line is extremely quick, but we need to have the correct documentation in order. For any sort of additional docs, I'm sure they can take a look at smallbusinessloansa.com. That should have all the verifiable information on in regards to what requirements they would need. But it makes everyone's life a lot easier if I can pre-qualify and assess the information, because at least then I can give an understanding of what you might qualify for, approximate costs, and the structure that I would recommend.
We will, after the session, in the link below, in the description below of any content that we will create, we will add our website, smallbusinessloansa.com. And so anybody that wants to be in contact with Graham can actually be in contact with us, and we can assist you with the process. If you already have an accountant and all your financials are up to date, you can directly speak to him. Otherwise, we can, from our side, from Dryk Holdings, as the accountants, we can assist you as well to get everything up to date. I know from working with a variety of credit providers for the last almost 20 years, as the way you provide your application form and your supporting documents to the bank or any other credit finance institution is the way that they will actually react and seeing you as the entrepreneur and the professional entrepreneur as well. So I think it's very important from the entrepreneur side is make sure your accountant is on board and let's call it Graham is on board, and everybody's on the same wavelength regarding the application, and make it a professional application, and don't give information by dribs and drabs. Compile a proper set of financials, management reports, letter of income, age analysis, whatever been requested, and compile it professionally and neat, because the person on the other side will always, that's the first impression from you and from your company. So just from my side, my point of view, been working with a lot of credit applications. The ones that's been done professionally and been sent properly is generally the ones that get financed as well.
Oh no, 100%. You're spot on. Getting your ducks in a row will streamline the process so much quicker, and secure your chance of finance exponentially. Because remember, when these guys are looking at you, they have to mitigate risk. So if we can prove to them and show them that you are on the ball and viable from the start, then it goes so much further to securing you the right amount, or actually getting you vetted and approved.
Graham, thank you very much for your time today. Do you have any last tips for entrepreneurs for them thinking about for the next 6 months, and also in general, overall doing great applications? Any last tips for entrepreneurs?
Yeah, look, just in finishing, I think what's most important to remember is cash flow management. Now, it's something that I've been preaching and educating on for several years. However, it's going to be a hot topic right now, because I think everybody's just realized, oh gosh, I need cash flow management as the apex decision right now for the business. Take your time, don't panic. Educate yourself. Contact us, contact Jasper via the necessary channels. We can help guide. Right now, it's important to manage your cash flow. And the greatest way I always explain cash flow, it is the blood of your business. Just like your body has vital organs like your heart, your liver, or in your case in the business, like your logistics or deliveries, or buying and marketing and so forth, it all requires blood to survive. Cash flow is the blood. And sometimes you just need to inject some of it to keep the whole system efficiently going.
Thank you very much for your time. I will put the link in, and I'm sure you will be available for consultations as well for any entrepreneurs that is currently under stress or just want to have a few inquiries and quickly speak to you. I'm sure you will be available.
100%. I'm fully available for the foreseeable future. I'm available. I'll be available on Zoom, on Skype, vice versa. If they want to telephonically give me a call or drop me a mail, we'll put our details in at the bottom there. Feel free to get in contact with me, and I'll try and assist you as best of my knowledge.
Great. Thank you very much for your time. And I'm looking forward to continue working with you.
Give back for entrepreneurs in the link below. It's a give back for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that give back for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the give back voucher in the link below, and we will be in contact with you as soon as you've done that.